This week, I made $2,500 selling options, and in this video, I want to explain everything that I did and all the trades that I went through. Let's jump right in. So, as many of you know, this was a strategy that I've been doing over the past several weeks. And I made a post over, I think it was last week or 2 weeks ago, that I made $8,500 selling options on one particular week. That week was an outlier. And I outlined that in a video that it was only because HIMS was trading at a crazy premium because the stock fell drastically on the Amazon news. And I took full advantage of that in the form of cash secured puts. I am, however, selling options consistently on both the cash secured put side and the selling of covered calls. Now, this week yielded me about $2,500, but only about 2,100 of that is cash stick. In other words, options that have fully closed and that I've closed them out. And there's about $300 in outstanding Tesla options that are still open that are going to be expiring next week. The reason why this number is much lower than the $8,500 option is because this was a shorter week. And so the premiums were not as good. But more importantly, I didn't write any covered calls this week. All I did this week was cash secured puts. And I want to have a more consistent series where I talk about selling options because I'm getting really into it. And it's actually something that it's clicking with me and I'm really enjoying talking about it. So I want to have full transparency with you in terms of all the trades I entered and where I entered and where I got out and what that yielded me. And so here we can see that I went into a total of 6 trades this week, all cash secured puts. And here you can also see the date when these trades were opened. So I opened them on November 25th all the way through November 27th. And many of them expired worthless today. I actually did end up closing 2 of these a little bit earlier and recycling that cash. So the first here is MicroStrategy. I did cash secured puts on MicroStrategy at a $300 strike price, which is super safe. The delta on this was 4. It's basically incredibly safe because MicroStrategy was trading for $393 on Monday when I opened this, and I wrote $300 cash secured puts. But I still ended up collecting $3.05 in premium. Now that yielded me about $262 in return, or 0.67% of my risked capital. And I ended up closing MicroStrategy on Wednesday when they had a big green day. They basically bounced back, and I paid 40 cents to close this out. And this was only one contract, so about $40 to close that out. And one contract here at $300 strike price represents $30,000 that was held in collateral. And I got paid here $3.05 in premium, so $305 in premium. And I paid $40, so I ended up with $262 in return. Now, the cool thing here is that MicroStrategy money that I freed up essentially, I then went ahead and I wrote a cash secured put for Tesla for next Friday, but we're going to get to that in just a second. The point here is that I recycled that money essentially intra week where I closed something out on Wednesday. And on Wednesday, again, I wrote another option for next week. Now, the second trade I made was again on Monday with Tesla when it was trading at $340. And this is a stock that I'm happy to own. I want to own it. So I was more aggressive with this one. I wrote $330 strike price expiring on Friday. I got paid a similar premium here, even though it was only 4% away from where Tesla was trading. I got paid $3.16. So that can just illustrate for you how volatile MicroStrategy cash secured puts were because MicroStrategy was over 20% away of where it was trading. And I got paid the same amount of premium pretty much as Tesla, which was just 4% away of that strike price at 330. The delta here was 15 and the premium again was $314. And I let this one ride to expiration because Tesla closed off this week at about $345 something. But this cash secured put option actually did get breached because Tesla at some point was trading at $325, and that was on Wednesday. And so what I did was I went ahead and I paid 40 cents to close out MicroStrategy, and then I went ahead and I opened $310 strike price Tesla cash secured puts for next Friday. And so essentially, I'm tranching this out because I thought that, okay, 330 is going to get hit. If we go down further, I want to have another cash secured put at $310. And so for this one, the premium was pretty much the same, $315 here, 20 delta for this one, and a 10% away from the strike price. Now, this is still open, so I'm not counting this in terms of the returns for the week. And if we calculate the returns for the week without this, it's about $2,100. I had the opportunity to close this out at 65% profit, but I chose not to. I chose to let it ride for another couple of days. And if we end up getting hit on that one, I'm perfectly fine with that. The other things that I wrote on Tuesday was Cleanspark. Cleanspark was down like 10% or 12% on Tuesday. And so I thought that was super lucrative. And I wrote 30 cash secured puts at a 12.50 strike price. Now, I got paid 20 cents in premium for those. That's about a 15 delta. It was about 13% away from where it was trading at that time. And I ended up getting paid about $580 in those because I paid $20 in fees because the fees are based per contract. And I wrote a lot of contracts here. CleanSpark ended the week at $14.35. So I really didn't get hit on those. I didn't even want to pay to close them out because CleanSpark was so far out of the money for those. I also did Lemonade on Tuesday. When Lemonade was trading for $49, I wrote $47 strike price. And the premiums here was really lucrative, 65 cents for a 20 delta. I wrote 10 of these and I got paid $642 for those. And that also didn't get hit. But Lemonade did actually fall down. It was trading at $49 and then it started trading at $48. And I said, okay, well, let me then deploy another round. And so I wrote three more contracts in the form of cash secured puts at $45 strike price for Lemonade. And I got paid $1.55 in premium, a lot more premium than I did for the 47s, which is 65 cents in premium. But the delta was higher at 29 delta. Now, I ended up closing those just earlier today on Friday for 40 cents, and I ended up yielding $346 in premium. This was a 2.4% return on my risked capital. So I basically risked $13,500 here because I wrote three cash secured puts on $45 and I got $346, which is 2.4% of that. And as you can see, here are the percentage return for that risked capital. So MicroStrategy gave us 0.67%. Tesla gave us almost 1% return this week. The CleanSpark gave us 1.4%. And then Lemonade gave us 1.3 and 2.4% respectively on that capital that was risked. And of course, we still have our Tesla cash secured put for $310 expiring next Friday. I might close that out on Monday if the market is green and Tesla is also trading green. I might just free up that money and close that out because as it stands, as the market closed today, this Tesla cash secured put is about 70% in the green already. And I was just letting it ride for a few more days. Now, the reason I didn't write any covered calls was because the market was not really too volatile. I should have probably ended up writing some covered calls anyways, but I didn't have any good opportunities in there where the premiums were essentially worth it. We'll see what happens next week, but I do have a large cash pile that I'm just waiting to deploy in the form of cash secured puts when the right opportunity strikes. What I'm looking at next week is I'm looking at potentially having cash secured puts on Tesla or TSLL, on Lemonade, on HIMS if it falls. And then I'm also looking at Nubank because that one is looking good, even though the premiums are not that good. I'm also looking at Soxil, which is an ETF. So I have to look at the premiums for that one too. But yeah, essentially that's what I'm doing. And I'll keep you guys posted in terms of my trades for next week. If you do like this series, let me know in the comments below and also let me know what you would have done differently here. This is a little bit outside of my normal content that I make because I usually just talk about particular stocks on a fundamental basis. But again, these are all companies that I want to be owning. Lemonade is a position that I'm building more heavily. Of course, Tesla is like bread and butter for me, and CleanSpark. I think at that price at 12.50 would have been too good of a deal to pass up because of where I think the miners are going to be headed with Bitcoin as it crosses 100,000 per coin. Again, do I think these returns are sustainable? Maybe, maybe not. I definitely don't think I'm going to have another week like I had last week where I had 8,500, but 2,000, per week. Considering the amount of capital that I'm risking, again, this is only cash secured puts, and I did have plenty of shares that I could have written covered calls on. I just didn't end up doing it this week. Again, this strategy is something that I'm learning more around it, and I'm really loving it as a strategy because I get to have cash in my account that sticks, and then I can just have more flexibility with that cash. So we'll see what ends up happening next week if I do covered calls and cash secured puts. But again, I'm doing it opportunistically. I'm not trying to force trades. I'm just trying to see if the opportunity is there, then I'll do it. But if it's not there, then I'm not going to take an outsized risk to get my shares called away if I'm not getting a good enough premium to be able to do that. Hope you enjoyed this video, and I will see you in the next one.